Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can write to us on the WhatsApp number that will be flashing on your screen. And do remember, each time you write to us, mention your name, the stock that you're looking to invest in, mention that name as well. And if you already purchased into the stock, mention the buy price, the quantity, and the time horizon. Time horizon being very key, because in that way we will be able to guide you better and direct your queries to a right set of experts. For short to medium term queries, we have Osho Krishan joining us on the show. He's a technical analyst and he will be taking all your queries on the technical front. While for the long term, medium to long term queries, we have Lancelot Dcunha joining us on the show to give you a fundamental take on the queries that you have sent us. With that, let me kickstart taking all of your stock related queries then. And this one is coming in from one of our viewers, that is Avinash. And he wants to know whether he can buy Cesc for trading. He's asking for a target and a stop loss if it can be bought. What's your view, Osho? Do you think for trading purpose it makes sense to buy Cesc?
Very good morning, first of all. Now coming to the technical view of Cesc, then this counter is obviously hovering at a positive stature because in the recent period when we have seen a decent correction in the market, Cesc has been maintaining its higher stature at the higher levels. Still now it is hovering around the zone of 188, 187, but I expect that there can be a strong continuation in the uptrend once it surpasses the zone of 192. So 192 will be a crucial resistance for the counter. The time it surpasses the zone 192, then we can see a continuation towards the zone of 205, followed by 206 for a very short-term perspective. While on the lower end, the positive thing is that it has started making higher lows. So that's a very positive outlook for this counter. So I expect the time it surpasses the zone of 192, we can see a very drastic up move in the counter for more than 200 plus kind of a target for short-term period.
All right, that's the take coming in on Cesc. But the next query that I have, Lancelot, let me take it from you. A very good morning, first of all. And this query is coming in from Sangeeta. She's writing to us from Pune and she wants a view on Wari Energies. If she wants to add this counter, will this be a good time to go ahead and buy this one, and any price entry point that you can suggest her? And also she wants to invest in spaces like pharma, finance and IT. So any stock from any of these three names where she can go ahead and bet for 1 to 2 years?
So I think, Wari Energies had recently got listed and had a very stellar listing. You've seen a huge appreciation in the stock in the short term. So from a fundamental perspective, it is expensive. It has been in the space of energy and green energy, and that is where there is a huge momentum into people investing into that space. But at the same time, from a fundamental basis, when you look at the valuations, they are pretty expensive at this point in time, and it's better to wait for some serious correction before one looks at buying into this stock. As far as other stocks to invest in the finance space, pharma space, I would think that one can definitely look at, valuations are much more reasonable in those pharma, both in the pharma space and the finance space. So in the finance space, one can look at, maybe even a SBI or an HDFC Bank, which offer, a reasonable valuation at this point in time. And if one looks at the pharma space, I think Narayana Rudalaya, which is a hospital company, seems to be reasonably valued. They are in a bit of a growth phase. The quarterly results were reasonable. They were not really high growth at this point in time, but they are investing in developing new capacity, which will come on stream over the next 8-9 months. And the sector is doing very well with the growing insurance penetration. So one can look at this with a 2 to 3 year horizon.
Right, this one is the next query is coming from Rebecca, and I hope I can do justice to the query that she's asking. Actually, Lancelot, she wants to know, are the stocks that are fundamentally strong, do they need to have a different philosophy than a stock that is technically in a good space? Her case in point is Titan, which is fundamentally good, versus a JSW Steel or a Nalco, for the matter of fact, which is in a cyclical sector. Or all three, do you think, are good for the long term?
I would look at it slightly differently. What happens is there are stocks which what we call where the earnings will compound over a period of time, consistently over a longer period of time. And Titan is one such stock because of its strong moat in its business strength. Today, whether it is the jewelry segment or the watch segment, almost 40 to 50% of the watches sold in India are Titan watches. They have a dominant place in the organized jewelry segment, and that is growing. So the profits are also expected to grow over the next, 3 to 5 years, or maybe even up to 10 years. So because it's a high growth company, the price multiple that was given or attributed to this company is relatively on the higher side. So one cannot treat these companies on the same basis as companies which may be cyclical, or where they do not have a long-term sustainable growth story, but growth will depend on the valuations at the time. So when, like JSW Steel, when the steel prices are down and the markets are down, that's the time to invest in JSW Steel. And when steel prices are overheated and the market is high, because it's a cyclical commodity, one needs to exit or book profits at those levels. So I would suggest that if in your portfolio, you need to have 50-60% of companies which are these long-term compounders like Titan, Asian Paints, Bajaj Finance. So these are companies which you will see sustained growth over a longer period of time. And even Nestle, for example, has been a very good compounder and very good return on net worth. So this is how you need to look at different kind of stocks and treat them differently for your portfolio.
All right, moving on to the next query, and Osho, the next query is coming in from Subrata Ghosh from Delhi, and he wants an advice on latent view. He has bought 4,000 shares and his buy price is 422 rupees. What do you see for this particular stock, and how do you spot this on technicals?
Person is already having at a decent lower levels of the consolidation band. So I expect that from here onwards, as the counter is hovering near the very strong base or very strong support of approximately 440 to 420 odd levels. So that is a very apt level to accumulate this counter, and the person has already accumulated the counter at these levels. So I expect that one should
I
stay
beg your
invested.
pardon, the buy price is 522, not 422. So for now, he's at a loss in this one. What will be your advice?
So still, the counter is still at a very strong base support level. So I expect that in the coming period there can be a decent up move, but 522 is a kind of a resistance for the short term period. So overall, this counter is in a very broader range of approximately 440 to approximately 540, 550 kind of a zone. So this is the immediate consolidation zone on the technical front. The time we witness a strong breakout above 540 on a closing basis, then only we can see a higher movement in the coming period. But for now, one can stay invested. The counter is at a very strong support levels, and one can expect a gradual up run towards the zone of 540 in short term period.
Let me take this next query coming from Venu, who is a senior citizen, writing to us from Chennai. He's saying, after consolidating for 2 months, BEL and Deepak Nitrite have shown some strength in yesterday's trading session. So what's the short-term target for both of these counters? As per yesterday, yes, all of these counters were buzzing in trade. But will that actually continue going ahead, given the fact that we are seeing a bout of profit booking in today's trading session, Osho?
To a time-wise corrective phase, but overall the stature was still positive. Yesterday, yes, it has given a sloping trend line breakout and is still hovering at a higher zone. So I expect that there can be a continuation in the trend for this counter. I expect a gradual up move in BEL, approximately 325, 330 is a higher zone where one can eye for in the short to medium term time frame. While on the lower end, 275 and 80 is a very strong support for this counter. So definitely a hold from short to medium term time frame, one can expect a decent up move. The other one was Deepak Nitrite, correct?
First one was Bharat Electronics, the other one is Deepak Nitrite.
Deepak Nitrite again has seen some kind of correction from the zone of nearly 3100 towards 2600, but again has started gaining traction, and overall the whole space have started gaining traction in the recent period. So I expect that there can be a continuation of short-term movement on the higher end. Still, the higher end consists of a very stiff resistance around the zone of 2950, 2980 odd levels. So until we witness a very strong breakout above 2980 odd levels, until that time, we can see some kind of sidewise or consolidation in this counter. Overall, the trend is positive. If someone is having a view from medium term time frame, they can definitely stay invested in this counter. The time we witness a strong breakout, there can be a decisive strong up move on the higher end of approximately 3 to 400 odd points.
All right, that's the day coming in on BEL as well as Deepak Nitrite. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries then. And the next query that I have is coming in on Canara Bank. And Osho, let me take it from you because Sushila has been holding the shares from a price of 111 rupees. She's holding more than 550 shares right now, almost at the cost price. But what to do with this particular stock, Osho? Is that an exit or hold at this price point?
See, overall, this counter is into a sloping channel and it is hovering around the higher zone or the resistance zone of 108. So I expect until we see a very strong breakout above 108, 110 kind of a zone, because on technical front, the 200-day SMA is approximately around 110 and the sloping trendline channel has a resistance around 108. So this is a very stiff resistance for the counter. Once we see a surpass above 108.10 odd levels, then we can see a decent gradual reversal in the trend in this counter. For now, the counter hovers within the cycle of lower lows, lower highs, and until we see a very decisive upsurge, till that time, it's better to stay sidelines. But as Sushila is already holding the position, so I will suggest to hold the position with a strict stop loss of around 99, 98 odd levels. On the higher end, once we see a breakout above 110, then we can see a gradual up move towards 116 to 118 from short-term time view.
This next one is coming from Sushil Kumar. He's writing to us from Trichy. He wants a technical view, but given the fact both the queries that he's asked on the stocks that he's asked the query on are recently listed counter. One is Commerce E-Solution and the other one is Bajaj Housing Finance. Our viewer wants to know what's the view coming in on both of these counters and also what's the short-term outlook for these stocks. I'm not sure if our viewer has already invested in both of these counters, actually, Lancelot, but if he has to take a look at them, do you think they're fundamentally strong companies?
I haven't done any work on Unicommerce e-solutions, so I can't really let you know. But on Bajaj Housing Finance, I think I have studied the company. It has a very good business model, astute management, NPAs are very low. And I think that is a company which one can accumulate over time. It does look a little expensive as compared to some of the other players in the market space, but that may be because it just got listed and there may be some initial, post IPO purchasing for people trying to accumulate larger lots. But if one is a patient investor and is looking at a 3 to 5 year horizon, investment in Bajaj Finance can give between 15 to 20% returns annualized. So that should be with a good amount of safety. So one can look at buying into Bajaj Housing Finance as part of the portfolio.
All right, that's the take coming in on Bajaj Housing Finance. But the next query, Osho, is coming in from Vivek, and he wants a 3 to 12 months view on IDFC Bank. He didn't mention then whether this he already has the stock as in portfolio or not. But in the next 3 to 12 months, where do you see the stock headed?
See, overall, IDFC First Bank is at a very strong support zone. We have seen a previous breakout around the zone of 58 to 60 odd levels. And last week also the low was approximately 59 odd levels. So I expect that from here onwards, the counter have already seen a very strong correction from the higher zone of approximately 35-40 odd percent. And from here onwards, one can start accumulating in a staggered manner, not very much aggressive because still the trend is very negative in this counter. But the only positive is the stock is at a very oversold territory and placed at a multi-week or multi-month support zone. So I expect that on a gradual basis, we can see a decent up move in this counter. For very short term period, approximately 74 to 75 is the first resistance. The time we witness a breakthrough above 74 odd levels, then the next resistance or the next target can be seen around 85. So for now, 58 is the support and 74 is the first target for short term, followed by 84, 85 odd levels.
All right, so that's the take coming in on IDFC First Bank. Just a quick note for all of our viewers, if you are seeking a technical advice coming in on recently listed counters, our experts will not be able to give you any advice on it technically because they have a very limited chart history. So they won't be able to give you, based on historical evidences, sort of a take coming in on recently listed counters. Having said that, we have Mr. Parthasarathi, K. Parthasarathi, who's a senior citizen from Chennai, wants to know fundamental technical view on Afcon's infra. He's already got 64 shares in the IPO allotment. He wants to know whether he should hold on to this one or look to exit. It's trading near the buy price. On the other hand, we have Deepak Dave, who's a long-term investor, and he's looking to enter Afcon infra afresh. What's your take for both of these counters, Lancelot? If you have studied this company, just got recently listed, what's your take?
So I think as far as Afcon's infrastructure, I have gone through this financials of the company and its business plans. But, it is a company belonging to the Shapoorji Pallonji Group and has been in the industry for quite a while. But when you look at the efficiency ratios of this company and its working capital, you find that it is not as strong as financially as strong as maybe some of the better players. Like, I would prefer to maybe invest in a Larsen & Toubro, which is similarly valued, but at the same time is a much stronger player, has a much stronger balance sheet, and the return on their equity is much higher. So I would look at it that it's better to invest in Larsen & Toubro as opposed to, buying into Afcon's infra.
He's already invested. He already, we have Parthasarathi who already has an allotment in Afcon's infra, about 64 shares. So what's your take to him then? Should he look to book out of this one and look at L&T afresh?
Yes, I would suggest that he can, book profits and move into a company like L&T because it offers a better risk-reward ratio than remaining invested in Afcon's infra. In case going forward, there may be some negative surprises, on earnings basis, you could see an Afcon's infra, correct sharply from these levels. Whereas L&T has come out with, good numbers, is moving into the aerospace area, and has got a record order book backlog with their implementation also improving. So I would look at it that it makes more sense from a risk-reward ratio to buy into an L&T and book profits on Afcons.
All right, then that's the take coming in on both of these names. But the next query, Lancelot, let me take it from you itself. This one is on ABB India. And just a while back, we have seen the earnings as well as the management commentary coming in. And post that, there was indeed a sharp correction in the stock. And Krishan has been holding the stock from a price of 8,082 rupees. But what is the medium-term outlook on this particular stock? What to do with this investment?
I think, this stock had gone up to very high valuations. I think it was trading at almost 120 times earnings. And it became very difficult really to justify any kind of investment outlook at that price. Now, post the quarterly numbers, the stock has seen re-rating in terms of the quarter, while the long-term business outlook is good. Inflation and increasing input costs have had an impact on the margins of the company. And that has meant that there is a re-rating that is taking place. So I think even at this point in time, margins still remain a little bit, the prices do remain a little bit higher in terms of valuation, that one can look at maybe another 8-10% correction, then it would become an attractive investment. But from a long-term perspective, yes, ABB India does look a good player to add exposure, especially in the capital goods segment. With the kind of growth expected in the power sector, you will see ABB India benefiting from this growth, and one should look at it, but at lower valuations.
Coming to you then, Osho. This one is coming from Ramesh. He's writing to us from Hyderabad. He wants to know about two of the banks. One is AU Small Finance Bank. He has about 505 shares, which he purchased at 704 rupees per share. The other one being Bandhan Bank, which he's purchased 400 shares at a price of 201 rupees per share. What should he do with both of these counters, given the fact that he is in loss with both of them?
Firstly, with AU Small Finance Bank, this counter have seen a very decent move in the last couple of months, but again, last couple of weeks has been very devastating for this counter, has corrected tremendously from higher zone. But the positive outlook is that it is at a very strong support overall on the weekly time frame. The support zone complies approximately around the zone of 580 and 600 odd level. So it is at a near to its multi-week support. So I expect that there can be a further correction that will be decent enough. I expect 580-90 to be providing a strong cushion to this counter. And from here onwards, there can be a gradual up move towards the higher band of the resistance, which is nearly 730, 740 odd levels. So one should definitely stay invested, hold this counter. That this will take some patience and some time period to recover the losses. But over a period of, let's say, 2 to 3 months, we can see a target of nearly 740 to 750 in this counter from short to medium term time frame. The other one was Bandhan Bank. In Bandhan Bank, there has been not very much convincing movement in the recent period. Overall, the trend remains bearish in this counter, but I expect that now the counter has the potential to move beyond the zone of 200. But overall, still one should stay sidelines. The person is already holding the position, so I would suggest to hold it with a stop loss of nearly 168. If it closes below 168, then we can see another set of fall in this counter. And on the higher end, near about 205, 208 is the immediate resistance. Once it break through above the resistance, then only we can see some kind of higher movements in the coming period. For now, there is no movement as such in Bandhan Bank, and fresh accumulation or averaging is not advisable.
All right, that's today coming in on both of these names. But with this, it's once again time to slip into a very quick break. Viewers, don't go anywhere. We'll be right back, and we will be taking more of your stock-related queries. Welcome back to Buy Now Sell Now, and let's keep it going with all your stock related queries then. And the next query that I have is coming in from Srinivasan from Bangalore. And Osho, if you can guide him on IRCTC, his buy price is around 300 rupees, and he's been holding this for the last 3 years. What to do with this particular stock? He's already earned a good returns in this particular counter, but do you believe it's still a hold from these levels?
See, after a correction from higher levels of 1100 to 850, still Srinivasan is having a very strong positive returns over this counter. I suggest to hold this counter for a future perspective also, because the overall trend for now, there has been some kind of correction, but the overall trend is still primarily is into a uptrend. For now, I expect the support is near about the zone of 790 to 800 odd levels, and the time we see a gradual up move beyond 870 kind of a zone, then we can see a decent reversal in the trend. So for now, the counter is into a sloping channel, but 870, 875 is the zone from where we can see a decisive reversal in the trend, and one can definitely expect a target of nearly 950, 960 in short-term period. And overall, the larger picture remains very positive for this counter. So I will suggest to hold this counter if the person does not need the money for the time.
Is actually coming to you once again, Osho. Shiva from Chennai has 70 shares of IndusInd Bank. He purchased it at a level of 1,464 rupees per share. He wants to know how soon will the stock actually move above those levels that his buy price was. And also he's saying that his time horizon is 3 months. So what should he do? Should he continue to stay put with this with the hope that he will be able to recoup the losses?
See, overall, there has been a very strong sell-off in this counter in the last 1 to 2 trading weeks, from the zone of nearly 1350 towards the zone of now 1000. But overall, now at this point of time, I won't suggest to exit this counter, because the counter has already seen a very strong plunge from the higher levels and is now hovering near a very strong support of approximately 1000, 1020 odd levels. So this is a kind of a support. I do not expect a very strong reversal in the coming period, but on a gradual basis, the counter has the potential to retest the zone of 1300, 1350, but that is also on a gradual basis. So I expect that if the person can hold it for a medium term time frame, yes, one can definitely get a costing kind of a returns in this counter, but overall the structure at present levels is not very positive, and I expect that one should stay invested from a medium to long term perspective in this counter.
All right, moving on to the next query, and Lancelot, this query is coming in from a very long-term viewer named Rajan Iyer, who's been holding shares of IRCTC for the past 15 years. He's been a long-term holder, but now he's waiting for the ITC Hotels demerger. While the plans are still on, the ratio and everything has been there in the public, but he's still waiting for this particular trigger. Would you advise to wait in ITC? Even at these levels, or just move on and look out for some other opportunity?
So, when you look at ITC, its business basically comprises of cigarette business, then it's FMCG and personal care business, and then there's the hotels and the paper piece. So all these together actually form part of the valuation of this company. And we have seen that the FMCG business has been slowing down. Volumes in the sugar business have remained relatively stable. And actually, as of now, the sugar business has been driving the the cigarette business has been driving the profitability going forward. So that should continue to remain, let's say, stagnant in terms of volume growth for cigarette sales. But profitability can improve because the company keeps on increasing prices, and with every price increase, its profitability is taken care of. But if one is looking at the demerger of the hotel business, the trigger will come in terms of a re-rating, in terms of the valuation of the hotel business. I think standalone, if you take the hotel business, it requires a lot of capital raising, and the valuation of that business may not be as good as the same as what is being treated for ITC at this point in time. So I think if that is the only trigger in terms of holding on to this business, one should look at exiting it, even at this current price. And if one wants to take exposure in the hotel business, then you can look at Indian Hotels, which is doing very well, or even let's say Lemon Tree, where you could see better returns from that basis. And you can look ideally at other FMCG companies like Marico Industries for the exposure to the FMCG business.
Right, so that's a proper bifurcation coming in from Lancelot. If you want to look at the hospitality space or for the FMCG space, and if that is the reason why you are actually holding on to ITC, then you can look at these alternate names as well. But on that note, thank you so much, Lancelot, as well as Osho, for joining us on the show. We come to the end of this edition of Buy Now, Sell Now. So thank you, viewers, for writing in. It's a goodbye from Shrishti, myself, and the team that put the show together. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.